What is going on, YouTube? The market is selling off right now. We're down to 634 on SPY, not even 2%. So it's not that big of a deal. I'm already seeing headlines out there that are saying, like, this is the worst day since April or whatever you want to call it. But yeah, not as bad, right? As people may say it is. You might see some boxes behind me. I'm getting ready to move in less than a week, so just ignore that. But two things that we're going to talk about in this video. One, we're going to talk about current market sentiment, where we're possibly headed in the short term, and just kind of analyze where we're at in the markets right now. And then two, we're going to talk about Nike stock. I'll show you my current position in Nike right now. I haven't sold any. I haven't bought any in a little bit. I'm just maintaining this position. So I'll show you that, and then we'll kind of just touch up on Nike. But before we get into it, I'm just asking one thing. Like the video, please. It lets me know that you enjoy the content, and I'll make sure to keep pumping out as much content for you, but just like the video. All right, cool. So starting off with SPY right now, we're down, $9? 645 was the high right now. So, or was the high, 646 flat, whatever it was. So we're not even down 2% right now on the S&P. So whatever you see, like $9, $10, $11, it might sound a lot worse than it is, but I want you to think of the market in terms of percentages, right? So I'm going to show you something really quick and why I say this. So right now we're not even down 2%, which is nothing. SPY's at $635, or let's just call it 645. When you look at SPY back in 2000, actually, let me go to the monthly real quick. I already had this drawn out, actually. So in terms of dollar amount, like, that's fine when you look at that, but you really want to think of percentages. And what I mean by that and why I say is, like, you look at SPY back in 2007, before they had that big drop. SPY went down $90 on the ETF, right? And that was 57%, which is a massive drop. Right now, think about $90 right now on SPY. That's about 13.85% right now, which obviously 13%, 13.85% is still a pretty big chunk, but we would only be down $90 as opposed to, back in the day, 57% was a 90% drop. And you're going to see a lot of people that see, like, oh my God, we're down $20 on the S&P. Like, we're down crazy, but we're really not, right? Because when SPY is at $1,000 one day and it goes down $100, it's only going to be a 10% drop, right? Imagine we went down $100, back in the day when it was only like $200, right? It's a big difference. So, I mean, right now, we're not even down 2%. It's nothing. I really wouldn't worry about it. But if you were in 444, if you are in 444, about a month ago, I posted just kind of like where we may be headed in the next 2 months. So I had this chart posted in there, and this kind of goes over the seasonality of the current market. Now you could put SPY, you could put any stock in there that you want, but I want to get kind of just a glimpse of, like, the overall market, right? I look at this here and there just to kind of see, like, where we're headed. Like, after you look at this for a while, you kind of know, like, what months are weaker than others. But I posted this in July in 444, and I was saying, like, August and September are the weakest months out of the year collectively, like back to back. You see February and April are not too good, but August and September back-to-back months are really bad, especially September being the worst month. So why that is, I'm not sure. It's just weak seasonality in the markets where people tend to just sell their stocks, take profit. It's just the way it is. So September is a really bad month, and we're not there yet. So I think, like, what's happening, right? We're just getting that weak seasonality sell-off, and then you have people taking profits from this ridiculous run that we've had in the markets. So there's nothing wrong with that. It's completely normal, which is also why I did take profits on a lot of, like Micron. I sold a majority of my Micron position just to store some extra cash and build this extra cash for a potential dip. So that's kind of just what's happening right now. Where we're headed short term, I think we will get, a little bit more of a dip heading into September. September could be a bad month, and then Q4 we kind of start to go up again, and then maybe end of the year you start getting people that sell off for tax purposes and stuff like that. But I think that's what's happening. Look, just looking at this chart, especially just go to the beginning of the year. We're up 7.73%. We were actually up more than double digits this year, just before we had this the sell off, I believe. Let me see, almost about 10%. Look, we had 2 back-to-back years of over 20% gains on the S&P, which is insane. So if we were going to have even double-digit gains this year, I'd be concerned going into 2026, just because that can't just continue to happen. Like, we can't go up over 20% back-to-back years, then 10 or 11%, and then expect another 10, 11. Like, it's not. I would be really concerned. I would like us to finish single digits, maybe even low single digits this year, just to kind of set us up for a higher year in 2026. And just because SPY isn't doing its thing, and that's only up 4%, doesn't mean other individual stocks are going to follow suit. So again, if you're in 444, we have been buying some more defensive stocks just to kind of just hedge the portfolio. But that's kind of where I think we're going. Probably a little bit more of a dip. Maybe we test 619, going back to the lows in August when it first started. August 1st. Maybe dip a little lower, and then we kind of trend higher going into Q4. So Nike stock is what I want to touch up on. So Nike stock, this is my current position. In Nike, I have about almost 200 shares, up about $1,300 right now, just under 10%. Look, Nike is one of those stocks. And here's the thing, like with Nike and just other stocks in general. You're gonna notice this in the market, that there's certain stocks that have bad sentiment around them. Even if it's for 1 month, 6 months, a year, 2 years, you're gonna start to see companies that just, you can go on Twitter or X, Facebook, TikTok, Instagram, you name it, YouTube comments, and you're going to see a lot of people starting to kind of bash stocks because the stock price is going down, right? And I think the way most people look at stocks is they're investing into a stock. They're not investing into a company, and that's not the way to look at it, right? When you're buying a stock, you're investing in a business that's behind that stock price. So anything that happens to the stock price, you can't just sit there and say and let it change your narrative and say like, oh, this company's going to, it's turning into a disaster. Let me just exit my position. You can't do that. You're gonna notice that that's what most people do, especially in retail. They don't understand that it's a business. And from when I've started getting into investing, this is something that I've noticed, is that you're gonna see companies that turn and have these narratives that follow them because the stock price is going down. So the first one that I could think of is Meta. Back in 2022, you saw in Meta that there was a ton of people. Now, the overall market did horrible in 2022, and then you had Meta that got really just crushed. There was a ton of narrative out there saying that they're a dying business. Nobody uses Facebook anymore, any of their apps that they have, and they're going to turn into the Blockbuster of the social media industry. And I just laugh. You can only laugh at that, right? When you look at the core business of their numbers, the statistics are ridiculous. How many people in this world use at least one app that Meta's used, and just their growing revenue, their amount of cash that they have on hand. Not a lot of people look at that. They just see the stock price and say, up, it's down, it's a bad company. So that's not the way you're supposed to look at things. I could tell you from a more recent example is Celsius. When Celsius was $30, well, So it went to like $90 at all time highs. And then once it went to 60, 50, 40, all the way down to $20, the narrative, it was the same thing, that it's a dying business. The growth isn't there. You're just going to be exit liquidity for people that are looking to sell their stock. And now it's all the way back at like $62. And I think it's green on a red day like this. So you can't listen to anything that you hear or see on social media because it just, again, narrative is always going to follow price. And that's something that I've noticed. Now, when it comes to Nike stock, we already know over the past, I think it's been years, it's been a disaster in terms of revenue growth and how they haven't grown their company. But when you look at why, you look at the whys behind it, and that's the good thing about being an investor and individually picking your own stocks, is that you look at the why behind anything that's happening into a business. And if you're able to say, this makes a lot of sense, right? They had a CEO that came in and he didn't do the right thing during COVID and basically just led them down a hole that they didn't want to go down. And then they bring in a new CEO that's trying to get them back on track, get them back to their roots, right? And it kind of just clicks for you like, okay, this is a beat up stock, beat up company, very valuable brand. Why not take a flyer on it? And aside from the core business, I mean, Nike is literally one of the most iconic logos and brands ever. I mean, obviously, you have Apple, there's Amazon, there's Google. I mean, there's a bunch of different companies out there, but Nike is one of the most iconic brands, logos that has ever been created. There's no denying that. And just that alone is good enough for me. And then obviously looking at the core business. But anyways, this is just one of the things. I had a screenshot here. So I like to do this every now and then when I just go through. You can go through Reddit threads. You go through X posts and look at people, talking about companies. But basically, this was the narrative that was happening with Nike, for years, is that you had On Running and Hoka that were going to overtake Nike in sales. Now, mind you, the sales comparison between them, it's not even close. There's not even a comparison in terms of sales between the companies, so I'm not even going to get into that. But you could just see like stock prices down, and people are saying that Nike's a dying business, right? This old dog's heading lower, no moat, no advantage over competition. So again, that's just because the stock price it was lower and not doing anything for a while. And for people that are new, they may see this and think like, wow, this person knows what they're talking about because the stock price is down. It makes all the sense to kind of bash a company whenever the stock price is down, right? Because they're trying to dictate like this is the reason why. But look, man, this game's not supposed to make sense. That's the whole point of it. But if you could see past all the noise, then you'll do fine in this. So there's also a lot of articles that have been coming out about Nike recently. That's there's a bull case. Nike's finally starting to turn it around. So I could play this video for a couple minutes.
Best day for Nike
I don't want it
shares
to go
in
too
about
long.
a month, leading the Dow. A top retail analyst upgrading the stock to overweight from neutral, $93 price target, citing its inventory and sales growth finally coming into better balance and the potential for more than 500 basis points of operating margin expansion through 2028. Nike stock is up more than 20% since the April lows, about 4% for the year. Joining me now is the analyst behind the call, Matthew Boss, JP Morgan equity research analyst. He was elected into Extel, formerly Institutional Investor Hall of Fame in 2023. Welcome. So tell me about why you believe Nike longer term is on the right track, especially because there are some real retailer relationships that they have to repair. Is there evidence that that has happened?
There is evidence. So thanks for having me on. A couple key points. Look, I think you're looking at the beginning of a multi-pronged and multi-year opportunity here for Nike. The first for us is I think the numbers have troughed. This is the first time in 15 months where we're actually raising numbers within the Nike model. And I think the real key is what's not in the financial model at this point. You have progression with the wholesale order books. Holiday is the first order book that ticked positive for Nike, as now you're lapping the main part of the franchise management. That was the bringing down of the excess inventory and the liquidation process. By the end of the second quarter, inventories globally are clean. You are ramping performance, which carries less fashion risk. That then triggers the gross margin opportunity. As you said, our model embeds 500 basis points of margin opportunity, but you're valuing this stock right now off of a 5% margin trough. That's why, from a valuation perspective, on the surface, this stock may look expensive, but you actually have a 700 to 800 basis point margin recovery just to get back to steady state margin profile pre-pandemic for Nike. That means this stock's actually trading 10 turns below.
All right, I'm going to end it there. But I know that he was throwing like a lot of these like terms out there that might be confusing for some, but basically the whole gist was that he was making that the trough, basically meaning like the whole bottom, the whole bad sentiment around Nike, the low part of their business is basically behind them, and it's really only up from here, and their margins are going to continue to go up because they're increasing their prices. That'll help them, and they had to clear out a lot of old inventory that they needed to just get rid of. So that's basically just what he was saying. But yeah, so I think Nike's going to be a slow cook. I've been in it since I started position back in, it's actually not in the screenshot, but I started position back in 2024, I think like April or May, at like $89 a share. And I brought that all the way down to $70. I didn't start a big position back at 89 because I was concerned that it would keep dropping. And that's why I slowly scaled in. But this is a slow cook. It may take another year for them to get to, maybe $100, 150. But I think it's going to happen. You just have to be patient, especially with companies like Nike, because they're past that high growth phase, right? They're not a growth company anymore. They pay a dividend. They're very slow growing company now. So it's a slow cook, but if you're patient, it's definitely going to work out. But that's all I have for this video today. If you enjoyed this video, make sure to give me a thumbs up, and I'll see you in the next one.